Good afternoon. This is Chris Robbins, I'm Upside Marketing with today's post-close grain and livestock comments for Monday, October 27th, 2025. Good day on anticipation that there's going to be a magical meeting on Friday and we're going to come out smelling like roses and everything's going to be honky-dory again. All I can tell is this, is we used it to make cash shields. Um, we've got a $1.04 trading range all year in soybeans, a high of 10.75 and three quarters. Guess what today's high was, kids? 10.72 and three quarters. So that's a 80-cent rally since the start of this month. We were down at 9.94. And if you don't use this 80-cent rally to get something done or hedge, come next week, if this deal doesn't go through and we drop back down 70 or 80 cents, the only person you're going to have to blame is yourself. So if you don't sell into this rally, set a hedge. If you don't use it, then I think you're making a huge mistake. I'm not saying it can't go higher, and suggesting making cash sales is not calling a top. But if you work with me, everybody got an email this morning. I had this level as a cash sale target set out 2 months ago for anybody that follows me. Part of what I do is I do the things that nobody wants to do, which the number one thing farmers hate to do is make a cash sale. They would probably rather cut their left pinky off than make a cash sale generally because they're always afraid they're making a bad decision, right? And when you make a cash sale, you're always wondering, did I sell too soon? Did I sell too late? I get it. It's a difficult decision to make. So what most people do is do nothing, and they wait all year and hope the prices are doing good when harvest comes around. So luckily, a lot of you guys dodged bullets because we had a low this year, but at least for 2025, down at 971. Again, a month ago we were down at 994. You go all the way back to last Christmas, this contract traded 961. So for anybody that turned their nose up at 1072 and three quarters, we settled at 1067. I think you're making a huge mistake. Sell it, sell it, sell it, sell it, and look to re-own it. Now, if you can't sell it, if you can't bring yourself to sell it, then definitely set a hedge. That's what we do all day. These corn could not fill the July 4th gap once again, right? Got the 431 and three quarters. The gap's at 432 and three quarters. But I don't know why. I don't know who's stopping us from filling that gap, but we did settle at 428 and three quarters, up 5.5 cents. March corn, which a lot of you guys are looking at because I know you're going to store anything anyhow, hit 444 and a quarter. It did not take out the previous high, which is at 449. That's going to be a big level that we're going to be looking at. If we can go get that, 449 opens up the door to a higher move in March corn. But again, there's nothing really bullish about China and corn. I hate to remind everybody of that. This is more of a sympathy rally. The September 16th high in March corn was 449, right? And then we went from 449 to last week, about 10 days ago, we went down and made a 2-month low at 425. So we're getting back up there again. Is this going to be something we can actually work with? I don't know. The high in 2025 for March corn, we hit in February. It was 490. So you do the math. We're at 450. Is there another 40 cents to go? I sure hope so, but we'll have to see. This rally even pulled up these week in Kansas City and Chicago. A nice rally, again, but just more of a short covering rally. What's driving this? Well, here's number one. Number one, the funds were already long about 10, 15,000 contracts of soybeans. They were short about 100,000 contracts of corn, which they really haven't gotten after. They were short of 100,000 contracts of soft red winter, and short, Kansas City as well, and short Minneapolis as well. You got to remember, we were just down at 5-year lows. So if you are a wheat bull, it's kind of like losing the Super Bowl 49-0, and you score a field goal, and then you score a touchdown, and then you're trash talking the other team. I'm like, look at this, look at the scoreboard. You're coming off 5-year lows. So yeah, it's nice to have a rally. Absolutely, positively, but we need a lot more. Okay, so if you're storing grain, use this rally to your benefit. I'd much rather see you make a cash sale into a rally than wait and do what most people do, which is they make the sales into new lows, which I've never understood in the 30 years I've been doing this, but to each his own. For my clients and my approach, we did make cash sales today in soybeans. Nothing else, nothing done in corn or beans, but we did reward this rally. And okay, if you're going to store the soybeans and you don't want to sell it, use this rally, use an 80-cent rally to buy a put, because puts that were expensive 48 hours ago got a whole lot cheaper. And if you don't want to make the sale, you have to buy the put. The put is a substitute sale. It gives you a floor for a certain amount of money for a certain amount of time. And here's the kicker: it keeps the upside completely open. So I'm not sitting here and saying that beans can't rally another 50 cents. I'm not saying that. What I'm saying is you don't want to be sitting here 10 days from now after an 80-cent rally and something changes and we're back down where we were at the beginning of the month, and you're screaming and what they used to call weeping and gnashing of teeth, right? You don't want to be that person. So use the rally. I know last week there were people on TV talking about how they needed whatever, a certain amount of money, a certain amount of price for beans. Certainly an 80-cent rally has got to be something that they can work with, I would hope. And moving over to the protein complex. Fat cattle down, did come off limit a little bit, but finished the day down 675 at 227 and change. Traded as low as 223 and change, 223, 175. November feeders finished the day down the expanded limit, 1375. Guess what? Tomorrow, if we're not done yet, there's another 1375 potentially to the downside. And we talked about this being a potential for pretty much a whole year. And this is the week that it's begun. There's a whole lot more going on here than the fact that we're going to bring up some hamburger from Argentina. This market got way, 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 way overdone. Probably 60 cents of the rally was attributed to two things. Number one, the closing of the border with Mexico because of screwworm, which conveniently gets not talked about, and then also the tariff we had with anything coming out of Brazil that made everything more expensive and helped make our cattle, which we have less of, more expensive. But the market is the market. Sooner or later it corrects, and we are correcting right now. We'll see how much of this one-year rally we are going to get back. We've already given back 25%. We did that last week. We're approaching giving back 38% of that rally, and that's how it always happens. It takes 10 months to rally. It takes a week or so to give away a huge, huge chunk of that rally. And yeah, nobody ever gets the email. Nobody gets the secret text message saying the highs are in. That's why marketing is so difficult. That's why you have to be disciplined and stay on top of it. So we'll see what happens tomorrow. The lean hogs kind of hung in there pretty well. It's been dancing around this 82-cent level, traded as low as 81.275 today, settled at 81.50. But that contract's been under pressure as well. And again, we'll see what happens. So interesting start to the week. We'll see how we trade tomorrow. Everything hinges on what actually happens Friday when President Trump comes walking out of that meeting with the president of China, Xi. Boy, I hope he has a smile on his face. Because if he doesn't, you know, Friday night, whatever, and then certainly the following Sunday night could be really dicey. So I'm glad we rallied. I'm glass half full person. I like rewarding rallies, but I do know there's a lot of risk of that meeting coming out. And here's one last thing. We could also get a situation where like China's like, yeah, we're coming back and we're going to plan on buying, 1 billion bushels. Okay, that's going to sound great to the uninformed, but they've been buying 1 billion bushels. They've been buying 25% of our crop for, 2 decades. So for them to just come back and say, oh yeah, we're going to buy so many soybeans, if it's not more than 1 billion bushels, you make it a situation where whatever the number is, it's not enough. So there's a lot of risk coming on that meeting there, and that's why it's a beautiful, beautiful gift that we've rallied 80 cents here off the lows in beans. Please, please, please take advantage of it. Do something to reward that gain in um, revenue value. No matter what, how many bushels you've got sold, 80 cents matters to most of you. So this is Chris Robinson. Have a great rest of the night. If you're looking for help, give me a call 312-638-8868. I do the homework every day. I share my opinion with you every day. I give you targets every day. So you have somebody else to blame if you don't like the targets. A big part of people's hesitation with marketing is they hate to make a mistake, right? They want to sell too early. So having a plan, having a structured plan, I think can help some of you. Some of you out there don't need any help. I get it. You are trading savants. God bless you. You're not listening to me. But if you're struggling, if you're having trouble picking levels, that's exactly what I do with my clients. And who am I and why should you care, right? Chris Robinson, Robinson Ag Marketing. Spent 18 years on the floor trading my own account. I was not a filling broker. I did not work for a big processing plant or anything like that. And in 2010, I migrated off the floor with everybody else who came to work one day and then realized that all the orders were gone and they were on the screen and nobody needed us anymore to stand in there and trade markets, to physically trade. I began working with farmers and producers in 2010. I started Robinson Ag Marketing on my own uh, 7 years ago now. So, but I've been doing this now for the better part of 15 years, 7 of it on my own. So hopefully my approach appeals to you. I do have a daily letter you can sign up for. I do have a weekly private client um, podcast, which I'm going to post tonight. I'm working on it as I speak. I kind of wanted to wait and see what happened to cattle. We got a lot to talk about. And specifically, I dig into what levels I'm looking at, why I'm looking at them, and how we're adjusting our hedges. Have a good rest of the night and take care.